Hey everybody, Dan Rawich here, University of Options, with your daily trade recap and market update. And I think yesterday's video did not have sound, and I really apologize for that. That's one of the reasons I didn't put it on YouTube, and I was just too tired to redo it. I'm sorry, but I think the images and whatnot probably, hopefully, did help. But I know it's not the same, so I apologize. Anyway, we had another great day today. And just to show you, yesterday we went at 94.4 win rate. Our 7 day win rate is over 92%, and we're just under 90% for 30 days. I think these results are amazing, and they're real. So, I know if you know me, then you followed me on Rate Watch, for 10, 15 years, these numbers are real. Um, if you don't know me, then it's like, oh, come on, nobody does that. Well, we do it, and we do it almost every day. And anybody that wants to watch us can watch us. You're welcome to come into our live trading room. We every trade is logged in real time. Sometimes there's a lag for them to show up, but you can see today, Lee took 5 trades, all wins. I only took 3 trades today, all wins, and the stats look like this. Lee went 5-0 for $62 a contract. And just a reminder, he trades 20 contracts, so that's $1,240. And I made 46 on 3 trades. I quit early because I exceeded my daily goal, and there's no reason to keep trading, right? And I trade 40 contracts, so that's like $1,840 gain. All right, now let's look at the market. The market was unbelievable today. It was insane. I'm going to start by going through our trades, and then we'll take a broader view. So first trade I took was 8 a.m. right when my shift started. It took it at 8:01, and I closed it out at 8:01, and it was a really big gain. This was $27 per contract. And simple as can be. We got the bull signal, and then we had to clear the dot, as you know. And the dot, it kept kind of clearing, but it didn't matter because the chop index was going up, and the chop index is like magic. And you can see that suddenly we got a pretty big drop in chop. I could have gone in here, waited one more candle with this even bigger drop in chop. This was an unbelievably no-brainer trade. The next trade I did not take until 9:44, and similar. The bull signal came. I usually don't enter right on that candle, but I had reason to do so. You can see the bull signal here. There's no dot, so we have to clear the wicks. And this candle in itself pretty much cleared the wick. We had a drop in chop. It wasn't too bad. It wasn't, to me, like such an obvious trade. Normally, I would have waited until this bar right here. I'm not sure why I didn't. And the results would have been just the same, trust me, because I entered here toward the top of the bar. If I would have entered here near to the bottom of the bar, I would have been in only like one candle and out, nice profit. Instead, I was in a little longer than I'd like to be. Um, and then the last one, I think, was around noon. Yep, this one was too long, and I held on to it more than I normally do, but I will explain myself. So bull signal comes along, and then we have to clear these wicks right here. You can see that the signal was confirmed at 11:46, and the chop index dropped. So could have taken a bit of a gain here, but it seemed like there was still some momentum in the price action, and then it pulled back pretty severely. Now, one of the reasons I took this trade here is I planned on using the 50-day moving average as a stop loss, and the reason is the last time that it touched, it bounced really hard. And the time before that, it bounced really hard. So you can here it bounced really hard. Here it bounced really hard. So the 50 has been a good springboard. So I rode that down, took a little bit of a pain, watching the account draw down. Um, I also knew that if we did come through the 50, we had this real big buy block that would probably take price up again. But anyway, so held it through, let it bounce, and came out with a pretty decent profit. Um, okay, so also while we're here, I wanted to talk about the dark pools. In fact, let me show you. Why is all this looking this way? Uh-oh. I may have lost. No, I don't think I did. I'm going to show you the dark pool a different way, just be a little bit more efficient. So the dark pools are here and here. So you can see you had some at 427, and then it was 428, like 19. It's a little bit hard to see. Let me see if I blow this up, if it's better. You still can't see the exact round numbers, but you can see where the dark pools were. Now, what are these big fat red lines? These are the GEX levels. So this is gamma exposure, meaning it's where the dealers have a lot of exposure and need to stay hedged primarily around these areas. And price is going to be drawn like a magnet toward GEX, always. So it becomes a really strong support and resistance. I just screwed it up. I don't know what I did. But you get the idea. The GEX really came into play. Actually, I do want this to show. Oh, and while we're here, when's the last time we saw bullish option flow on the SPY? So this rally, I've been saying over and over, we're due for a pretty big snapback rally. Even though the options flow hasn't looked great, the markets remain pretty strong. So, and the jobs data, which was really bad for bonds, is actually really good for stocks, because a lot of people are employed and the economy still appears, I don't buy it, but appears to be doing pretty well in spite of, the Fed raising rates a lot. Lately, though, other than today, you would see that something that was so unfriendly for bonds would have also hurt stocks. Because ultimately, if rates keep going up, there's no way the stock market can go up. There's no way. It's never happened. So this rally took me a little bit by surprise. So, but you can see this green options flow. It's nice to look at. So then we have our dark pool levels, which we looked at. And price was just all over them all day. We had some really big snapbacks. This one was one. There was a couple other areas where it just touched and pulled back pretty good. Also bounced off it. So it really stayed stuck to these dark pools up here. And then we have the Greek levels, which again is dealer exposure. I thought I'd selected that. That should be showing. I'm sorry, guys. I'm definitely having a frustrating afternoon. It'll show up now. There they are. So these big fat red lines are where dealers have exposure. I think market makers, they have to hedge. Price is going to be drawn toward these levels like, a fly to a light or a mosquito to a light. You can just see how price plays along these. So, and these GEX levels were here yesterday, as were these dark pools. So one would almost have expected price to run up and test that, especially on a Friday when options expire. So I think that's good enough there. Then the last thing I will show you, well, not like the last thing. So I'm looking at a different part of this dashboard now. Just looking at the SPY is great, but I think it's sometimes good to get a wider view. To begin with, if you want to watch a couple stocks, I'm not saying jump into them, but I'm saying if you know how to read a chart, particularly for members, if you have Flight Station and our system, you might look at ATOS, GSAT, United Airlines, BG, American Airlines, and Wish. That's enough. So take a look at these because there were some pretty big options activity that triggered these alerts. Um, Dark pools are all showing up for every kind of stock. So all of these levels become important. IWM at 182.02, etc. And then you can see the options, real-time options flow. The biggest heat scores were these companies, and they're all green. So it was a pretty bullish day, all in all. Last but not least, let's see what the big money did. And they bought pretty big yesterday. So again, the big money pretty much predicted this move, created it, I should say. You can see that on Thursday, the BMI was 46.6. Oh, it had already gone up from Wednesday. Sorry. Yeah, no, sorry. I'm right. We won't see Fridays until Monday morning. But this was a pretty big jump here, pretty important. And then we have, I think it's over here, our time cycles. And you can see the Dow for the first time in a long time is starting to turn up, as is long term. This could trigger, again, a pretty massive rally if this turns up and starts moving. The NASDAQ continues to stay squished up here in the upper reversal zone. But I would say that the arrow is just dead straight, but the long term is still pointing up. So this equals a little bit of chop, but with a pretty good bullish bias. And then last but not least, the S&P, it actually is turning up, and the long end is turning up. So long story short, I think we're going to see a pretty good rally next week. And you can see here on the time cycle, it's forecasted to climb just as it is here. So yeah, I'm bullish going into Monday. It was a great day trading, great day for the markets, and I hope you guys did well and you have a great weekend. Thank you.